morning, and good morning, everybody. This is John for our regular scheduled planning and scanning Monday morning, and typically I have the let me get over to the desktop sharing and put up our charts. Wow, yeah, Steve, that was, thank you very much for that, Steve. The Stock Traders Almanac, I'll tell you what, that was quite an honor. The way I found out was in a complete surprise. In fact, we had Sonia was there. We had, where's Jim? Jim's not here today. Oh, we had a whole bunch. Jerome was there. A lot of people. So I think, in fact, I think it was Jerome who walked up to me and said, "Hey, would you sign this?" And I go, "What is this? Dedicated to John Person? What is this? Who did this?" And it was Yale Hirsch, Andrew Cardwell, I think Ed Yardini. They're on I guess their committee, and they voted my book the best investment book. That I knew they were going to do. So I knew I was getting the best investment book award of 2014, even though the book came out in December of 2012. But the book, by the time they read it and all this, and they got they write the book. It's in May, so it gets published. Blah blah blah. But they dedicated the book, the entire Stock Traders Almanac, apparently, because Jeff and his father, they use our indicators. I allow them to use our stuff, and he loves it. So anyway, between that and the award in April, this was actually a big year, folks, that the world kind of gave a little bit of recognition to what we're doing around here. Because in April, if you remember, I was down in New Orleans, and the APTA, American Association of Professional Technical Analysts, it's a society of well, let's see. APTA was founded by the founders of MTA, and it's comprised of the people on the board are mostly fund managers. Larry McMillan is the president this year. McMillan Analytics Options. Greg Morris, Nelson Freeberg. I mean, the list of Charles Kirkpatrick, who won the Charles Dow Award like 3 times in a row. I mean, these are like the market wizards of the world, so to speak. So anyway, that was quite an honor in April, which is why I missed the 50th 50th reunion of the Rolling Stones concert, because I had to go. I got invited to go to the Stones, but I had to go to New Orleans to get this certificate award thing. So anyway, and then this. So when they asked me to sign this, I was like almost teary-eyed. I go, I can't believe he did this. I mean, wow, it was quite an honor. So, all right, what happened in Las Vegas stays in Las Vegas, except for that. That happened in Las Vegas. We had a live trading challenge. And last week, Thursday, if you were trading in the market in the room, you probably were banging your head against the wall, because the S&Ps had, what, a 3-tick range for the last hour of trading. Crude oil had like a 4-tick range. Gold, I think, had a 60-cent range. And I was looking at taking a breakout buy signal on the British pound, and I went, gee, what are the odds if the S&Ps can't even move? What are the odds the British pound's going to move? Besides, the buy signal came about 8 or 10, 9 minutes before the competition was going to end. And I just felt, if I get in this trade, I might not be able to get out of this trade. So that's how the live, they actually, the irony is they put me up against Rob Hoffman, and Rob didn't, same thing. He didn't have a trade. After the event, Rob told me, I was thinking of putting a 5 lot in the crude, and I turned to Rob. I said, yeah, I was thinking of doing like a 4 lot in the pound. And we kind of laughed, because we were all going to just go in for it, like just to make a tick or so, some scalp, right? But boy, I'll tell you, we started the competition, and the S&Ps were at 94, and we ended the competition. I mean, we were closing our laptops down, and we turned and we looked. The market, the SPUs were trading 94. I mean, it was the most. There's a huge audience. So, anyway, so that was another highlight. There's some other things that happened in Vegas, but we'll save that for another time. So let's talk about what's going on with this stock market, because on last week we had this little advanced decline move to the downside, and then Thursday and then Friday complete reversals. So now we're looking at new highs with the Obama surprise Iran deal. Uh, it's not the, is it the Iran-Contra, Iran-Obama? I mean, Iran-Contra was one thing when we grew up as kids. Now they're calling it the Obama-Iran deal versus the Iran-Obama. So anyway, needless to event, but we took out a swing high, which was this right here on the 18th. So we take that high out. The question is, we didn't take out the high in the advanced decline on a daily basis, no volume. It happened not only with the S&Ps, it happened with the Qs. Now here's where it gets interesting. The Russell did. So we're back on the Russell being in the last month. Many of you may recognize the fact that the Russell was the weakest index, and it really didn't go anywhere. And from a perspective of taking out that particular high, we did. We haven't taken out the all-time high, even though we've taken out, we took out this high, the highest closing high, but we didn't take out, we took out the swing high, but in the advanced decline, we did not. So we still don't have confirmation of this rally moving higher, but I would tell you the fact that the volume indicator, I mean, typically they don't lie. It's just a delayed reaction. So I would really say that, you know, if this rally is on short squeeze, short bought funds, you know, it could go up forever. I just don't believe at this lofty price in the next 60 days it will be at this level. 60 days from now, if you think about it, where will we be? Mid-January. So at this point in time, I think that the equity markets, unless we get confirmation this week, and it's going to take a couple days, in other words, the prices stay up and we see the advanced decline. So everyone needs to be on guard to be watching the advanced decline. I'll be here with you guys in and out this week. Wednesday is kind of a shortened trading day. Friday, Black Friday, the market statistically rallies like, I don't know what this, I'd have to read this is something that Jeff and his father started, is to look at the percentage of times in November trading the Thanksgiving market. I think it's called the day after or Black Friday, and it was, I'm not sure if it was Ken Fisher or someone that actually picked up on it, but the day after Thanksgiving, typically we see the stock market rally. So probably tomorrow, if I get my reading glasses and the fog kind of lifts, because as you know, I was in Germany 2 weeks ago. Was it 2 weeks ago? I was in Germany, and we did the trading competition there, which was really fun. And that one was a bummer because we were like $63 away from first place, but that's neither here nor there. But the moral of the story is a little jet lagged here, folks. So going from Germany to Florida to Vegas, I tell you what, I didn't know whether I wanted to eat dinner or breakfast most of the time. So give me a chance to look it over, but I do. I think everyone is familiar with the statistics about the day before and the day after, which is kind of strange because if we do stick with that seasonality of the market, we should expect a little bit of follow-through upside in the market. So how high can this thing go? Well, let me finish through and look at the Dow Jones Industrial Average, because this is, again, the one that's broken out finally on a daily chart. We've broken significantly. This is the diamonds now. And when I say we've broken out, this is the one that's always been perplexing because we made newer highs and we were struggling against making new highs in the advanced decline. And so we just barely broke out of new highs with the advanced decline. And again, here's the other scenario. It's the volume. It's the lack of volume on this. This is the scary thing. So we need to get a little bit of volume to make this thing sustainable. And we're using on balance volume. We're not using the volume histogram bars. And that's something that we should be seeing, follow through on the daily charts. the weekly charts are still showing that this market is strong. And with the NYSE, and I just wanted to show this with you on a weekly basis, on the NYSE, if we were trading, if the advanced decline and the volume are your only gauges to use, and I'll zoom this up for you. If these were your only two gauges to use, you'd say, wow, they've got some decent volume going into this market. It's in an uptrend, as you can see. But boy, out of 7,000 or so stocks in the NYSE, we're starting to develop a weekly, I want you to pay attention to this, a weekly bearish divergence. Friends, that's not that bullish. A weekly higher degree time frame bearish divergence is pretty negative. I'm here to tell you. So the NYSE, the fact that we've broken out to newer highs in the last few weeks, so from the peak high of October 25th, which is right here, we've broken out to newer highs, and we have not done it with the advanced decline. So this week, if you see a rally, or if it just a rally can also be it maintains its strength. It doesn't really go anywhere. It just sits here, right? I would say I think we get short-term this week upside, but then when we get back from the holidays, if Black Friday wasn't as strong as they priced in, if Cyber Monday people don't go rushing out to buy new 65-inch TV screens, then I could see this scenario. I can see the market maybe giving the illusion that it worked for the seasonally strong period of time for Thanksgiving, and then next week you come in, and as we get into December, here's the key. I think December we get a little bit of a sell-off, and the market gets all bummed out, and the media will sit there and scratch their head for the month of December and say, gee, where did Santa Claus go? Is it going to be a Santa Claus rally? And then, you know, of course, we'll get the last week of Christmas, we'll get some kind of a bounce, and they'll say Santa Claus showed up. So what I'm looking at from a timing element, from a pricing element, and from technical analysis is I'm looking for prices to maintain the levels that they're at right now this week. We might not see significant sell-offs. And so if we do see further gains today, you know, like, and I don't know if it's conceivable to see, for example, 1820 this week or 1815. Let's even be generous and say 18 from today's high. If we take today's high out, or the overnight session's high out, and we get up to like close to 1815 in the S&Ps, I'm looking at more credit call spreads, because I think going into next week, based on the advanced decline on a weekly basis, based on the volume levels that I see, I'm thinking that we are going to see a little pause and a small correction back into the market. I mean, we could easily get, I mean, if we go up to like 1815, we could easily get back into, you know, trading in a range down here, get back to 1870, which of course was Wednesday's low, and you know, in somewhere into this type of range right in here. So I'm basing this on volume. I'm basing it on advanced decline. I'm basing it on market condition. So the market goes from a trend to a consolidation, and I think next week. So, you know, if we get the market, if it has the capability of getting a little bit higher, somewhere up in this range here, then I'm thinking coming after Thanksgiving. Now, the room, I believe, is going to be closed Wednesday and Friday. And so, or, you know, if it's possible, I'll probably try to come in here, because I'll be watching the markets anyway, because they're open. So anyway, we'll be here. We'll try to be here for a little bit in the morning. But I think coming in next week, we want to be able to, I think the 1st of December, we've got a timing element that we could see. I'm not saying that the exact 1st of December, because the first couple days you try to generally see some pension fund money, but the first week of December, I think we got a timing element to the downside, especially if we do not see this improve right here. That's the key. So the volume, if price goes up and we don't see today on the close an acceleration in the advanced decline, if today on the close we don't see an acceleration of on-balance volume and the market just lingers around in here, then I think that's the theme I'm looking for, okay? So for stocks, what do we do for stocks? I have kind of a, I think the overall market is at this point in time, it's on its own little mission to just take off straight up, and the reason is because I've been talking about this short bought situation. A lot of funds are still they're in cash. They need to buy. The euphoric that the market's never going to go down. The euphoria that the Fed is going to be there. You know, the economy, we seem to see pockets of strength in the economy. I'm here to tell you, Las Vegas was booming. Prices are outrageous. When I say prices are outrageous, I don't know how to put it into definitive terms to you guys, but I mean, it's probably not a surprise to find out a cup of coffee like $5-6, or a drink at the bar is like $12 or something like that. But to the pricing element of going to a restaurant and buying a sushi roll, one roll for sushi, a lobster roll, was $39. I mean, it's like, really? Come on, man. Seriously? A little tiny little lobster roll, you got to charge $39. A California roll, and I'm talking MGM, Shibuya. I'll just give you specific prices. You know, you eat dinner for two and you're modest and not going crazy because, you know, you're cutting back, trying to cut back that little fat thing so you don't go absolutely crazy and get a little dinner. It's like $300 without booze. $300 without booze for dinner for two. I mean, so to me, that's a little pricey. So Vegas, you know, people were spending money like it was like no tomorrow. So you know, I've always been telling everyone that if consumer discretionary, the best consumer discretionary guide is if the economy's doing well, people have so much money. What do? They can afford to get on an inflated airline price, $600 or $680 round trip Miami to direct flight to Vegas. So airline tickets are more expensive. Hotels are more expensive. The food's more expensive. So you got that much money that you can fly out to Vegas. I'm telling you something, people are doing a little bit better. But the key is, are they doing better enough to justify where the market is right now? Well, there's two sides of that argument, and people are saying because of the price to earning ratio, or PEG, and more importantly, that the market is maybe priced right. And so some people think that because it's gone up too far too fast. I mean, there's all sides of this argument. We could listen to the news, and I had listened to the news in Vegas because, you know, you sit around in the airport, blah, 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 blah. I kind of read things. So this is what I'm in tune to right now, is what the media is saying. You got the people that say it can't go any higher, and here it goes higher. You got the people that say it can still go up without a correction, and I think they're smoking crack. So looking at the VIX trading under 13, I mean, gosh, forbid this thing, you know, it just won't move. So credit put spreads in the VIX is probably the right game, but, you know, you don't really get much for them. So here's what I'm saying in a roundabout way. I think the market is getting people a little bit, I think it's getting too complacent, and I can give you my opinion, but what I'm doing is I'm looking at testifiable evidence in here, and I can say, you know, I don't know when it's going to come, what hour it's going to come, but I can tell you this, the conditions in which I'm looking for it to come need, or will be, from these fuchsia lines down here in all these segments of the market, and it's going to come from the evidence in this blue line down here called on-balance volume, and that's in the stock market. So when we go over to my scanning page right now, so we're going to go to scanning and planning real quick. And so when I take a look at some of the markets in scanning and planning, actually I'm going to go over here and check this out. This is a feature that's available on Genesis. It's a sector analysis. So why don't we take a look at not the 26 weeks, let's just go and look at the last 6 weeks, okay? And I'm going to go all subsectors. No, we'll go all sectors. Subsectors will take too long. So now this is a really cool tool because it tells me immediately what the we're going to go 6 weeks. All right. I mean, I could go 1 week, but I like 6 weeks and month and a half, right? So the best performing sector we have, as you can see, is transportation. So if they got to build something, then there's an order, they're going to ship it. All right. So that's got to tell you something strong. The worst performing sector is real estate. Well, that's funny because the economy's doing better, then people buy homes, and home prices start to escalate, and you start to see turnover. So we're starting to see an increase in, of course, transportation, consumer, retail, apparel, and I'm going to share this observation with you. You know, you guys have been around with me a long time, and I share with you, like, remember that one Christmas or the one time I went to Macy's and I started asking about questions about how their orders and I talked to the lady and they go, oh yeah, our inventory is real good. And I said, I really like Macy's. Other times I give you these like busybody analogies where I go in and I start asking questions, or like in 2008 and when I was in Europe, and I said, man, they put a Starbucks in France in Champs-Élysées and on Saint-Honoré, and man, it's like Starbucks in France is like telling the French that we have a better product than them, and yet it was busy, and then the French started to embrace the Starbucks experience, and Starbucks was around $8.50, and I told my buddy, I know I told a lot of you guys this story in the trading room through the years, but I told my buddy Tom Sosnoff at Thinkorswim, he says, I'll never touch Starbucks again. I've been buying all the way since 24, and here it is like 8.5, and I know I told that trade to everyone in this room, and sure enough, well, it didn't stay there very long, but you know, the world was falling apart, et cetera, et cetera. It was a great trade. Now I'm here to tell you, I'm sitting on the airplane, American Airline, and I get up because, you know, I had those pulmonary embolism problems, and I got to walk and drink a lot of water, and I go to the back, and I ask the girl, can I get a water, and she gives it to me. I said, can I get another glass? She looks at me funny. I said, listen, I don't mean to be a pig, but I already drank my half a gallon of water I had, and I need to drink. I'm a survivor of PEs. And she goes, what's that? I go, you've been in the airline business and you don't know what a PE is? And she goes, no, this is my second flight. I just got hired, brand new. I'm brand new. I go, wow. American Airlines just hired a new airline stewardess. Interesting. She goes, oh yeah, there's a huge class of us, a bunch of girls. We all got new hires. I go, a bunch of girls all got hired. I said, I bet your parents are proud. She goes, oh yeah. And she starts going on. She was 27. She lived at home. She lived in Atlanta. She couldn't find a job. She finally got hired. She got called up. And her biggest concern now, I want you to pay attention to this because this is very important to what I'm going to share with you right now. Her biggest concern right now is to save enough money up before the holidays on her paycheck. She hasn't gotten paid yet even, right? She needs to buy new clothes. Are you paying attention to this? More women were hired in America. Now, I know that's not a sampling of the world or the whole United States, but there are more women being employed. And this girl said she had a whole bunch of classmates that all got hired, that some friends, they all got new hired, all females, by the way. And so consumer apparel, and I'm thinking to myself, gee, what consumer apparel would a girl go to that is going to be hiring? So the sector that's not really doing as strong as, or it is still strong, is retail apparel. I'm looking at female retail apparel particular stores in my scans. The next thing is, here's a girl that's going to be looking at moving out of her parents' house pretty soon. And I'm thinking, what's the worst sector in the last 6 weeks? Now let's change this to 18 weeks. Gee whiz. Real estate isn't doing anything. It's worse than utilities. And when we take a look and try to find, let's look down here real quick and try to find, where's retail, durables and apparel. Now, in the last 18 weeks, apparel's done well. So let's look in the last 26 weeks. It's still, real estate's doing like the worst, okay? And so in the last 26 weeks, which is 6 months more or less, right? Consumer durables and apparel isn't, outperforming the overall market. So it looks like still the best sector and a subsector would be automobiles, but I think there's apparel and female apparel stores. And unfortunately, I didn't ask the girl what her favorite store is, but I would say TJX is been very popular, and it's a little overpriced. But in the retail apparel sector, you've got, I think, Cache, Chico's, and in that age group. And Taylor might be for a little bit older kind of crowd. So I'm going to be doing a little bit of digging, and what I would say to you guys is let's, Urban Outfitters, they have Anthropology, which is their online component. And, they're kind of like in these long shadows on a monthly and a quarterly basis. This is a stock that I think it might be going through. This is a little scary. This looks to me more like a distribution top rather than a consolidation to get ready to get higher, because that volume level right there isn't very good. This daily volume, look at this. Price didn't really break out to newer lows, but that volume did. That's pretty scary. So I'm going to stay away from Urban Outfitter. So in my search for this week and in the next few days, I think what we need to do is work a little bit harder for some retail. I want to focus in on some retail apparel stocks that target maybe women going back to the workforce. That's a theme right there. And the next theme I want to look into is looking at real estate. So diversified financials, this past week, we've had an enormous move to the upside in the banking sector. In the real estate sector, let's take a look at this, because we're going to be coming up with our list of our best stocks for end-of-year buying, and that is the list that we're going to be getting for stocks that are contained, that are not at their 52-week lows, but really haven't moved. And I'm going to share one with you in just a minute. But looking at the real estate sector for this year, I mean, if the economy's doing really, really good, right, what's the one sector that hasn't really done anything from a year-to-date perspective? Well, the real estate market, I mean, at least in certain segments of the real estate market. So if you take a look at this, if the economy's doing really well and the banks are picking up and the people are getting jobs and their credit's going to shore up, what's the next level or the next area that might have a great low-risk, high-reward potential? It's the market that hasn't moved. That's the next segment to take off. So as the economy starts to improve and people go back to jobs, they're going to be buying clothes, they're going to be buying this, they're going to be that. Eventually they're going to be, whether it's getting out and into an apartment, but they're moving out. If you're 27 years old and you got to go on a date, the last thing you want is your father, if you're a girl, asking you, who's this guy picking you up? You want to move out. And you're going to get an apartment maybe at the very least. So real estate investment trusts that run some of the apartment complexes, I'm going to be running a scan, and this is some of the thought process that I think we can work together on. But looking at the real estate, this is where we closed at the end of the year. And on the index, we closed at 148.02. We're negative on the year in the real estate segment. So some of the components here in these stocks, real estate management, some of the components, this is a company called Alex. One thing that I'd have to say about Alex is that it already generated a high closed doji on a daily. It's popped to the upside. From a seasonal perspective, look what it does. It bottoms out and rallies. Interesting. So I think one of the things, and it kind of, looking over here, it goes up going into about early February. So here's a stock that we could focus in on. Volume, by the way, on the rally to the small little rally, volume was pretty substantial. So I'm not the only one that's coming up with this conclusion that maybe now's the time to start looking at real estate. Here's a name that I think we could start to look at, Alex. It certainly has a low-risk situation to it, right? If we take a look at a trend of the market, let me punch this up for you real quick. I mean, if you just connect the dots from low to low to low to low, you're coming back into some value here. So, one thing that we don't have, we have kind of a quasi high closed doji on a weekly basis. This stock is in the NYSE, so it won't pop up on unless we run a scan on all the stocks in the NYSE. But we ran a subsector and a seasonal sector of the market, and here we are at 37, and we were at 46 at the end of August. So it's been there. It's kind of proven itself. This is a stock that, as it declined, it never declined on substantial volume. So that means they were still maintaining longs in this trade. So there's a couple ways to play it. A, you look for a small little pullback in the market, or B, what we do is we look for this failed doji high, and then you look for a breakout to buy above this little swing high, which is like 38.18. So two alerts that we want to set: 38.19, number one, and number two, we want to probably look and see if this market just stays range bound in the next couple days. I would say support at around 36.70. So 36.70 is right against these highs. Let me get rid of the weekly pivots so that we could see this a little closer. All right. So everyone has that, right? And I think that's a reasonable trade in at least for this segment. So low risk is what I'm really looking for. I'm looking for low risk situation scenarios in the marketplace. And I'm looking at sectors that haven't really been picked up, but yet need to pick up if the economy truly is to move forward. So anyway, this is Alex. I know I don't have a whole lot of lists for you, but I thought we'd focus in on the real estate sector, and then we're going to focus this week. One of my main concerns is to focus this week with you, and we'll put together, I'm going to try to put together a list for some of the female retail apparel shops that we could start to look at that haven't just absolutely taken off through the roof. So that's all we have for today. I wanted to say thank you all for being in attendance, and we want to wish everyone a wonderful Thanksgiving, and thanks, and for those that will watch the recording, thanks for coming out to Las Vegas and seeing us. Thank you all.